Hey, how's it going? Welcome back. Episode 2 of, becoming a better investor in 2024. I have started to read You Can Be a Stock Market Genius by Joel Greenblatt. So I've gotten about 20% through the book, finished chapter 1, most of chapter 2. And so we're going to cover kind of the key takeaways that I had from this initial reading. Chapter 1 is pretty basic, kind of outlaying the book, sharing some stories. It's a very funny read. Joel Greenblatt has some great wit and really, is great at putting things into layman's terms and comparing it to other real life situations. Like, he basically boils down the stock market and investing as his in-laws who are avid antiquers going out to find antiques on the weekend, which I thought was a really interesting way to phrase it. They're always looking for, art pieces, collectibles that their current price at these estate markets or wherever they're finding them does not represent their actual value. So they have a zone of expertise. They know what these things are worth at an auction house or to the right collector. And so they can go and take that advantage and find these market mispricing. And that's kind of what you need to do when you're thinking about investing in public market security. So that was kind of chapter 1, was the big takeaway. I really love that antiquing story because I just thought it was such a great way to capture what you need to do to be successful in the stock picking game, I guess I would say. And then chapter 2, it dives into some rules, and I'll just go, I got 3 big takeaways from this. The first is do your own work. Don't trust any analyst reports. Don't trust anyone else's kind of recommendations without doing your own analysis, without making sure that stocks are meeting the criteria that you've set out for your investment thesis. So, and the reason for that is because you have to be thinking about when this was written, stock equity research analysts were a much bigger deal, a much bigger part of this. Now, this is probably more comparable to people on Twitter espousing their opinions, as equity research is not as kind of prevalent as it was back in the day. It still is, and it's still a part of every major bank. They have equity research departments, but you have to think about the incentives of why someone would issue, a buy or a hold or a sell. And especially in the case of analysts, like, they're not going to mention, or they don't have as much incentive to pick sell, especially if they're going against the grain, against the crowd, because then they take a reputational hit and things like that. So the key, do your own analysis. Don't trust anyone else's work. Don't trust, the Twitter, Instagram, TikTok stock picker. Do the work, do the analysis yourself. Second off is, when you are going about picking your stocks, you need to find kind of your advantage, your zone of competence, and then be really patient and wait to strike. So picking investments is all about the patience aspect of it and waiting until you really find those opportunities that can outperform, which I think can be very difficult. It really goes into, you don't need to just be buying stocks. What you really should be doing is pulling money aside, so that when you find the right opportunities, you can invest them in a big way. And secondarily is so that you have money that you can weather market downswings without having to sell your stocks. Because there's always going to be volatility. And if you're playing, the long game, thinking about long term of stocks, they're going to go up and down. And their different prices could have, they could come from macro effects. They could come from, economics, things happen in the market all the time. So you really need to be able to have that long-term vision and not panic sell and really be keeping your money for the right opportunities in the right times. And so those are kind of the 3 big takeaways. So stock market is like antiquing. Do your own work. Find your zone of competence, your advantage, and wait to strike. So have that patience. And then always kind of, you don't need to constantly feel the need to buy stocks. Like, you need to be putting money in the bank and waiting for the right opportunities and to use that patience. So that's, week 1, episode 1. If you have any thoughts, comments, please leave them in the video comment section. Would love to discuss further. We'll be finishing chapter 2 this week and hopefully get through chapter 3 and 4, and then we can be about halfway done with the book going into next week. So please follow my page here on LinkedIn. Hope you enjoyed this video, and can't wait to be back for more next Sunday.